Joining us now is Mastercard CEO Michael Miebach. Michael, so great to have you here on set. Thanks for joining me.
Morgan, thanks for having me.
You've talked about it in the past, how resilient the consumer has been. Given how strong the data has been, given the commentary from Powell today, that basically a soft landing is still the most likely scenario at this moment in time, do you see it the same way?
The consumer has been resilient. So all along, the consumer has been surprising us. If you take a walk around the world, United States, resilient consumer. The consumer in Asia is still catching up. So it's been a consistent story. But the consumer also has to make trade-offs. They have to make decisions. Longer time of elevated inflation means that you have to decide prices, necessity, preferences. Those are all criteria that people do make the trade-offs. In the end, they make trade-offs work in their favor, as in, I do want to travel. So they do that, and then they spend less on something else because that might be less necessary. Overall, they make it work, and as long as the consumer is resilient, I think what Powell's saying could very well be true.
Yeah, and cross-border travel has certainly been something that's powered growth in your own business, so that continues.
That does continue. So there's still potential, particularly outbound from Asia, particularly outbound from China, that we have put out a set of numbers where we're saying we're probably on the outbound side at 65% of pre-crisis, pre-COVID levels of outbound travel. So that's happening. The summers, I mean, right now, I just came back from a trip. Very anecdotally, you can't get a seat, and people do want to travel. So it continues. And we have not seen a trend of this is purely catch-up to make up for lost time. It sits at relatively consistent levels.
Interesting. So this idea of revenge travel, maybe not showing up in the data.
I think initially it was really clearly there, but we're starting to see pre-crisis levels continuing.
Okay. I do want to get your thoughts also on inflation. I mean, and not just here in the U.S., where we have seen credit card debt reach record levels, but across the world. Disinflation, at least from a market standpoint, has really seized as a narrative, even as we're getting all of this hawkish central bank talk from around the world. Is disinflation something that you're starting to see in the data, given the fact that you are covering billions upon billions of transactions?
We're starting to, I would say, calling it a downward trend we're not quite there yet, but we're starting to see it cooling off here and there. For us, the way when we look ahead, there's a few things we monitor. And one is resilient job market. That goes right back to consumer spending as one of the drivers. Excess savings levels, access and willingness to access credit. Those are all things that impact what the consumer wants to do and is able to do. So those we keep in mind. The recent confidence crisis in banking system, that's also something to monitor. So there are a few moving parts here, but overall, it's been slowing a bit.
Okay. I got one more question on this, and that's Goldman Sachs came out, trimmed estimates this morning, cited 4 headwinds to card network revenues. Number one is student loan repayments. So this is a U.S.-specific question here, but they'd expect that it's going to be a headwind to U.S. card volumes. We're awaiting the Supreme Court decision on student loan forgiveness, but assuming that you see repayments start come September, how are you assessing that? Is it a risk?
Right. We're not into the lending business, so it really does not affect our revenue directly. So therefore, I think that'd be a better question to pose to a bank.
Yeah.
Overall, this aspect of credit access and willingness that I just talked about, that is interesting, and it's something we keep in focus. So in terms of historic credit access and credit write-offs, we're still not quite back to where we were before COVID, and that's fundamentally a healthy trend.
So just to pick up on what you said, does it matter then if people aren't spending as much or the size of the transactions aren't as large on your network?
So consumer spends dramatically impacts the services that we provide. So it matters if they spend more, that comes through. But there's a normal spend logic. So for a period of inflation, inflation had an impact. But back to what I said at the beginning, people do make trade-offs depending on prices and so forth. So as we look forward, we'll have to see where that goes in terms of repayments and so forth. But I don't expect it's a mega impact on us. That's more for the banks.